mandata la mail.
E ora c'è una lezione.
Ah, c'è
Sì,
lezione?
sì, quindi posso tornare dopo? Oppure...
Sì, torno
Ok.
pure dopo. Aspetta, qua esco, chiudo qua.
Ok. Grazie.
Ciao.
Io volevo chiederti per il tablet, avevo mandato la mail quando c'era arrivato.
No, perché quello che devo smantellare non è tanto che deve essere ancorata per esempio all'informativa. Lì, anche se deve macchinare in realtà la rivoluzione è punta. Non è sicuro. Okay. I don't know if after the break, after a coffee, maybe a cake, so something that can help you and us, also can help me in order to finish the lecture. As you, this morning I had other 3 hours of lecture, so it's a quite tough day also for me, not only for you. The last hour dedicated to another important type of assets, and in particular, intangible assets. So intangible assets like brand, patent, software, copyright, and so on. Very important for users, for companies, and so we need to understand how intangible assets are accounted for. And under IFRS, there is a specific standard that is the IAS 38, dedicated to intangible assets. And we start with the definition of intangible assets. It's not theory. It's very, very, very important because this definition allows us in understanding why the IAS 38 states that some some type of expenses are not intangible assets. But we need to start from the definition. An intangible asset is an asset, of course, non-monetary, identifiable, without physical substance. So, asset, that is an asset controlled by an entity as a result of something that the entity did in the past. And if we have an asset, this means that the company expects to obtain future benefits from that asset. We are talking of intangible assets, okay? So assets that are other than tangible, without physical substance. Patents, brands, software, licenses, and so on. But also financial assets are not tangible, but they are not intangible assets, because in the definition, an intangible asset is a non-monetary asset. Okay, so securities, investment in securities are not intangible assets because they are monetary. And then I hope you remember that during the first lecture I told you that under IFRS, intangible assets are assets other than goodwill. Goodwill is not an intangible asset within the scope of IAS 38, because goodwill is dealt with another standard, IFRS 3, business combination. Do not worry that we will analyze also IFRS 3. But here we focus on intangible assets within the scope of IAS 38. Identifiable means that you can sell a brand, you can sell a software, you can sell a patent by themselves. Okay? You cannot sell goodwill without selling also the business, the company to which goodwill referred to.
Associated.
Exactly. The goodwill is always associated to a company, to a business. So it is not possible to separate goodwill from the company that is generating the goodwill. On the contrary, you can sell a brand, you can rent a brand, you can sell a patent, copyright, and so on. Another important thing is the control. Okay? An intangible asset is an asset if and only if the company is able to control the future economic benefit. Controlling the future economic benefits means that the company is able to protect these economic future benefits from other companies. Think about the brand. If the brand is registered, like a patent, it's the same. If there is another company that uses my brand, I can start the litigation and I can protect the future benefit from my brand. Is this clear? Control means that, thanks to most of the cases, legal rights, I can protect my asset, I can control the future benefit in in order to be sure that only the company will benefit from this asset. If it is not possible to control the future benefit, this means that the definition of intangible asset is not met. I'll give you an example. Training expenses for employees. Training expenses. Very important. If a company spends money in training its employees, this is because of the expectation of future benefits, improving the processes and so on. But suppose that you are an employee of a company. You attend a very good training course. Then, after some weeks, after the end of the training course, you decide to say goodbye to the company. You go to another company, and your company cannot protect the future benefit, cannot control the benefit from training courses, because the employees can leave the company. Okay? And so only in very specific situations, when the company can ask the employee to pay back the money for the training course, only in that case there is a control of the future benefits. Otherwise, for training courses, the control doesn't exist. So this means that training expenses, pay attention to my words, training expenses, so they are immediately recognized in the income statements as a cost. Okay? So control is important. Identifiability means other than goodwill. And of course, we need to demonstrate the capability of future economic benefit. Only if these important key points are satisfied, are met, only in this case we have an intangible asset. Otherwise, if we spend money from training courses, for example, this is an expense. Okay? And if an asset meets the definition of intangible asset, this doesn't mean that the asset is recognized in the balance sheet, because it is necessary to verify a second type of requirements. An intangible asset, that is, an asset that meets the three requirements: identifiability, control, and future economic benefit, is recognized as an asset in the balance sheet if and only if, first, we are able to demonstrate the probability of the future cash flows. Probability means it is more likely than not. So, probability higher than 50%. Okay? And second, the cost of the asset can be measured reliably. Is this clear for everybody? So there are two steps. First, are we talking of something that meets the three requirements? If no, income statement, for sure. If yes, we need to answer to another question. Is this type of money spent? Can we demonstrate the probability of obtaining future economic cash flows and the cost of this asset is reliably measured? If yes, we have an intangible asset. If no, income statement. Is this clear for everybody? Oh, brand are assets, intangible assets. Very important intangible assets. But it is not the same if you buy the brand or if you acquire the brand through a business combination. This means that you don't buy the brand, but you buy a company, and within the company there is the brand. At the end, you are buying the brand and you are paying. So there is a cost. And it is not so difficult to measure the cost. Is this clear for everybody? The difference between A and B is that in A, you buy the brand. There are no issues in determining the cost because you pay a certain amount of money. In the case B, you don't buy the brand. You buy a company. And within that company, there is also a brand, but there are also property, plans, inventories, and so on. It's a little bit more difficult to identify the cost, but not impossible. Please write here, just for you, IFRS 3, okay, business combination. We will discuss this topic next week. Okay?
So, what's the solution?
There is a solution, but now it would take too much time. We will analyze it when we will analyze IFRS 3. Generally speaking, the solution is to understand clearly what type of assets are you acquiring through the business combination, and then you estimate the value of the brand, the value of inventories, and so on. I don't want to tell anything about government grants because it's exactly what I told you 1 hour ago. And frankly, it is not so common. The barter transactions are not so common. Exchange of assets. Generally speaking, if you buy an asset, you pay. It's very, very difficult that you buy an asset and instead of paying cash, you give to the supplier another asset in exchange. Barter transaction, not so common. It's quite common to have internally generated intangible assets. And this is the problem. Because when an asset is internally generated, it is not so easy to determine the cost. It's difficult. It could be difficult. There is a lot of subjectivity. And for some type of intangible asset, it is not so easy to distinguish between the intangible asset, like brand, and the goodwill. Very difficult to identify the distinction and the separation between the value of the brand and the value of goodwill. For this reason, there are very few issues where the intangible asset is acquired separately. A lot of things written in this slide, but are exactly the same principle that you have applied this morning during the exercise hour for the tangible asset. Exactly the same. The cost of an intangible asset includes the purchase price, import duties, non-refundable purchase taxes, any direct attributable cost to the assets, exactly the same. Exactly the same. Okay? And exactly as for property, plant, and equipment, it is forbidden to recognize as intangible asset advertising and promotional activities. You cannot control the benefits of advertising and promotional activities. You cannot control it. Okay? So they are not intangible assets. Okay? Training costs are never capitalized. Again, because you cannot control the benefit. Administrative and other general overhead, again, they are not capitalized. Okay? So, exactly the same as for property, plant, and equipment. So, if you buy software, for example, if you buy a patent, if you buy, I don't know, whatever you want, at the end, there are no particular issues because there is a cost, a purchase price, and you need to determine only the directly attributable cost. Business combination, we need to apply IFRS 3. Okay? Now, right now, I ask you to be parted for some days. The problem is here. Internally generated intangible assets. It is difficult to verify the probability of the future benefit. It is difficult to identify the cost, more difficult at least. And it is very difficult in some cases to separate the intangible asset from the internal goodwill. Please pay attention. It is always forbidden to recognize the internally generated goodwill. It is forbidden. And I go ahead to slide number 8, then I will go back. Just in order to avoid any type of doubts, it is forbidden to recognize not only internally generated goodwill, but also internally generated brands, internally generated customer lists, and so on. Okay? So, I have a question for you. Ferrero, the Italian company, I think that you know that probably the most known brand owned by Ferrero is Nutella. Nutella is an internally generated brand. So if you download the consolidated financial statement of Ferrero, and if you read the item brands, in that item, Nutella brand is not included because it is an internally generated brand. Is this clear for everybody? This is very important. Because when you analyze financial statements, you must know that in the line brands, only some brands of the company are disclosed. Only the brands acquired, only the brands bought, purchased, because the internally generated brands are never presented in the balance sheet of the company. It is forbidden. Is this clear for everybody? Because during my professional activity, I met some analysts, someone also from very well-known universities or from very important consultant company, but they believed that in the item brands, all the brands of the company were presented. This is a big mistake. And if you use financial statements in order, for example, to make an evaluation of the company, you must know this. Otherwise, you completely misunderstood the meaning of the figures. Okay? I go back to the slide number 7. Internally generated assets, intangible assets. Of course, other than brands, because for brands it is not possible. We are talking here of, for example, software or other activities. Under IAS 38, it is necessary to distinguish the process into two parts: the research phase and the development phase. The research phase means that the project is in its early stage. It is very difficult for the company to demonstrate the probability of obtaining future economic benefit. Very difficult if the project is at its early stage. Okay? On the contrary, development phase means that you have a clear idea on the way you intend to use your project, by selling products, by allowing someone else to use your patents, and so on. This distinction is very, very important because all the costs incurred in the research phase are immediately recognized in the profit and loss, in the income statement. It is forbidden to recognize as an asset the cost incurred in the research phase. On the contrary, when the project enters into development phase, in this case, the costs are recognized as an intangible asset in the balance sheet. Is this clear for everybody? Research phase, income statement. Development phase, intangible asset. Within the company, in many cases, they simply use R&D, research and development. But this is the name of the department, the name of the function, right? But this doesn't mean that the project are in the phase of research or development. It depends on the single each project. So, slide number 9 and slide number 10 present some examples of research, slide number 9, and of development, slide number 10. Research means that the company is not sure about the final result. Of course, if the CEO, if the entrepreneur decides to start an R&D project, this is because in his or her mind there is an idea to obtain profit. The problem is that when the project is at its early stage, we don't know if we will be able to obtain this benefit. For example, we start an activity, a project, in order to acquire new knowledge or to evaluate some new materials, the possibility to use new materials, the possibility to improve some products or processes or whatever. The problem is that we are not able to demonstrate the probability of obtaining future benefits. Completely different is the development phase. Here, we are applying our research fundings in order to, for example, create a prototype or in order to implement a new process. So we know where we want to go and we know that it is possible to go there. Okay? So, this case, development means intangible assets in the balance sheet. IAS 38 states that in order to have a development phase, it is necessary to demonstrate the existence of all these 6 requirements. For example, you need to demonstrate the technical possibility to use the asset for use for the sale, but you are able to use it from a technical point of view. The second is quite easy to demonstrate, the intention to finish the project, to end the project. The third, you have to demonstrate the capability to use or to sell the intangible asset. But it is not enough, because you need to demonstrate the way the intangible asset may generate future economic benefit. For example, through the sale of a product, of a new product, or by improving a process. And you need to demonstrate the availability of technical and financial resources, or whatever it is necessary, in order to end the project. And the capability to define, to measure the cost of the development asset. If only one point is missing, this means that the project is in the research phase, and so cost in the income statement. In order to have development cost in the balance sheet, it is mandatory to demonstrate the existence of all the 6 requirements. Is it clear for everybody? Because if it is, I have some questions for you.
for example, in phase 3, if you do not meet the capability of use to sell the intangible assets right now in that time?
You are not in the development phase. Of course, today you are not able, but you are able to demonstrate how you intend to use and the capability to use the asset in, I don't know, 3, 4, 5 months, for example.
Yes. So how we categorize them in our financial statement?
If you are able to demonstrate that starting from today, you know that you in 4 months you will be able to sell the products. This is an intangible asset, so all the costs incurred from when the project enters into the development phase are in the balance sheet. But you need to demonstrate, okay? And if you are an auditor, and if you have to check the right implementation of IAS 38, you ask for evidence, okay? So in companies where the R&D are important, there is always someone in charge of the R&D project and someone that has the responsibility to demonstrate from the date, exactly the date from which the project enters into development phase. If the company is not able to demonstrate this, the beginning of the development phase, okay, no problem. We are always in the research phase, so casting the income statement. Okay? Now I have some questions for you. One question in particular. Pharmaceutical industry. Think about these last 2 years, something less than 2 years. All the companies involved in the research for a vaccine against COVID-19. A lot of money, a huge of money spent in this project. This is the case of the vaccine, but before COVID-19, the same for other type of projects. Okay, so pharmaceutical industry, they have a lot of projects because they, of course, they are always looking for new drugs in order to be used for various type of disease. Think about pharmaceutical industry. Think about these 6 requirements and tell me if, in your opinion, these costs are mainly research costs expensed in the income statement or mainly development costs capitalized in the balance sheet in the pharmaceutical industry. This is a question also for students that are at home, of course. So, Meiji Bayer or other pharmaceutical companies, also smaller than Bayer, every year they spend a lot of money in looking for new drugs. So one question is about the accounting treatment of this money. Do you think that most of this money is capitalized as development asset, development cost, and so asset, or do you expect to find this amount of money immediately in the income statement as research? One of your colleagues has just written balance sheet, so development phase, but just one answer. What do you think? All the others. And why? The answer is in the slide.
Research,
Why?
because I cannot be sure if the drugs will be useful or I can sell it.
Not exactly. The answer is research, and so income statement, for many reasons. First, because at the beginning you are not sure about the possibility to find the right drug. But then, because even if you find the right drug, then you have to pass all the tests, the first phase, second phase, third phase, and you need the authorization from the different authorities. And without the authorization, you are not able to demonstrate the capability to use the intangible asset in order to prepare the drugs, the products, and so to obtain the benefit. Is this clear for everybody? So when you read financial statements of pharmaceutical company, that they spend a huge amount of money in projects that are called R&D, but at the end, in that specific industry, the projects enter into development phase only after the authorization, the collection of the positive authorization from the different authorities. As you can imagine, at that point, 95% of the money has been already expensed in the income statement as research. Is this clear for everybody? This is very important. Otherwise, you read these financial statements, you expect to find in the balance sheet research activities, assets. You don't find that because of this type of approach. Because without the authorization from the authorities, the company is not able to demonstrate its capability to use the asset. Is this clear for everybody? Of course, in other industries it's different, and so it is possible to have, like in the automotive industry, when they spend money in order to project a new engine, for example. This is a development cost in the balance sheet. But if they are looking for new type of fuel, so for example, hydrogen, for example, there the phase is in the research, the project is in the research phase, because it is not, now they are not able to demonstrate the probability to obtain benefit from what they are doing now. Is this clear for everybody, the difference? And in this slide, in the slide 12, there are some examples of development activities. For example, when there are the construction of prototypes or stamps and the matrix for a new technology, or a pilot project, and so on. So, but for this type of project, the company is sure to go ahead. Sure is reasonable sure. Okay? Because when we do something, of course, it is always possible to have exceptional situations, but reasonable sure of obtaining future economic benefit. Is this clear for everybody? Then, what about the subsequent measurement model? In theory, cost model and revaluation model. But the revaluation model can be used only if there is an active market, and this is impossible to have. Moreover, I hope you remember, I repeated 2 hours ago, that the revaluation model is not used for property, plant, and equipment. And so, the same for intangible assets. So, the model is the cost model. The initial cost is maintained, and then we have just the amortization, and please read what is written in the slide, and or the impairment test. Why and or impairment test? Because under IAS 38, intangible asset can have a useful life, or to be more precise, the useful life can be finite. So this means that it is possible to estimate the useful life, and if you are able to estimate the useful life, you can amortize the intangible asset. Okay? For Italian students, not only for Italian students, also for foreign students, but in Italy we use the same word for both the depreciation and amortization. In English, depreciation is used for tangible assets, amortization is used for intangible assets. So, if we are able to estimate the useful life, I don't know, 10 years, so we start from the cost. We divided the cost over 10 years and we amortize the intangible asset. Then, in case of evidence of loss, we perform the impairment test. But only in case of evidence of losses. Under IFRS, it is possible for some intangible assets, mainly brands, not to be able to make an estimate because of the peculiarities of these brands. Think about brands like, I don't know, Chanel, Bulgari, Nutella. They have a long history, okay? And it's very difficult to determine a useful life. So if you are not able to estimate a useful life, of course you cannot amortize. Because in order to amortize a brand, you need to divide the cost over the useful life. And if you are not able to estimate the useful life, this means that you cannot amortize. But you cannot maintain the cost of the brand in the balance sheet forever. In this case, you need to test the value of the brand at the end of each reporting year through the impairment test. So, the impairment test is very important, and for brands and other intangible assets with an indefinite useful life, the impairment test is mandatory at least once a year. For tangible asset, property, plant, and equipment, And for intangible asset with a finite useful life, impairment test is mandatory on and only and if and only if there are evidence of losses. Otherwise, the depreciation for tangible asset and the amortization for intangible assets, it's enough. Is this clear for everybody? Tomorrow morning, we start with not tomorrow morning, tomorrow afternoon. Okay? It's late afternoon also for me. Tomorrow afternoon, we will start with some very simple exercises on R&D in particular, and then we will have a look at FCA financial statements in order to understand how R&D are accounted for, what type of brands are present in FCA and also in the other financial statements, but first of all from FCA financial statements. Okay? If you don't have other questions, and taking into account that it's 8 to 5, so we dobbiamo finire alle 5:30. So, I'm a little bit confused. Because I have all the pages of my financial statements, and in fact I realized that the time was enough in order to present the financial statement. So, sorry, it's my 6th hour of lectures, and I am a little bit confused. We have half an hour, and in this half an hour, we have the time to read the financial statement of FCA. Okay, so for students that are at home, sorry I made a mistake about the end of the lectures, but nothing dramatic. I need to find, this is FCA financial statements, okay? And if we go to page 200, here we have the balance sheet, consolidated balance sheet of FCA at the end of 2020. As you can see, there are two items for the intangible assets: goodwill and intangible assets with indefinite useful life, what we have just discussed. Okay? And then other intangible assets. As you can see, the amount are quite significant because goodwill and intangible assets with indefinite useful life, they amount to 13 billion out of 99.7 billion. Other intangible assets, 12.5 billion out of 99.7 billion. So the amounts are significant and material. If we go to the slide 208, this is the part of the notes where the intangible assets accounting policies are presented. We skip the goodwill because we will discuss it next week. Here we have the intangible assets with indefinite useful life. And as you can read here, they consist principally of brands that have no legal, contractual, competitive, economic, or other factors that limit their useful life. So, if there are no limits, it is not possible to determine the useful life, and so they are not amortized. They are simply tested annually in order to verify that the amount is still recoverable. At least once a year. Sometimes, but only when there are very bad events, also more frequently. Then, for FCA, the other intangible assets are very important, and they are mainly due to development expenditure. Development expenditure are for vehicle production and components like engines, production system, and so on. The money spent in this project is recognized as an asset if and only if the development expenditure can be measured reliably and the technical feasibility of the product, the projected volumes and prices supported the view that the development expenditure would generate economic benefit. So at the end, 5 conditions summarized in one sentence. Do you agree? Because FCA, in order to capitalize the development expenses, has to demonstrate the technical feasibility and the capability to generate future cash flows. In which manner? Using, of course, the projected volumes, the pricing of the engine, parts, and so on. The amount capitalized include all the direct and indirect costs that could be directly attributable to the development process. All the other, please read, pay attention, okay? All the other development expenditure are expensed. Why development? Because for FCA, they are development projects. But for the accounting standard, they are in the research phase if the requirements are not met. Is this clear for everybody? Then, once capitalized, they are amortized on a straight line basis from when the related asset is available for use. Imagine the engine, a project in order to develop a new engine. It takes some months, more than 1 year, and the benefits, the FCA can obtain benefits only when the production of the car starts. Okay? Starting from that period, these assets are amortized over the expected life of the models, 5-6 years, or for other type of developments over the expected life of the powertrains, 10-12 years. Is it clear for everybody? So here we can understand, even if at a very high level, the mechanism used by FCA. The first part is just theory, or I mean, nothing new, okay? Because it's just a recap, a summary of the accounting principle. More interesting, the second sentence, because here we can understand the amortization period. 5-6 years for development costs related to models, 10-12 years for development costs related to powertrains. Is this clear for everybody? Also for students at home? If we go then to page 235, this is a description of the research and development costs recognizing the income statement. Okay? Please look at the amount, 2.9 billion. Okay? If I go back to the income statement, research and development costs. Look, do you remember last Tuesday? These costs are presented according to their function. Okay? Research and development costs in 2020 for FCA were equal to 2.9 billion, almost 3 billion. Okay? And this is the note number 5, page 235. And you can see here the breakdown. The total amount is 2.9, but the amount immediately expensed in the income statement is 1.2 billion. This 1.2 billion means costs incurred in 2020 for which the 6 requirements are not met. Pay attention that FCA uses the word research and development expenditure, but at the end means cost for which it is not possible to demonstrate the the capability to generate future benefit. 1.2 billion. But we have also the amortization of development expenditure capitalized, because development costs for engines, powertrains, and so on, they are recognized in the balance sheet and they are amortized over 5-6 years for the models or 10-12 years for the powertrain. So this means that the amortization 1.2 billion is the amortization charged to the income statement in 2020 that refer to previous capitalized development costs. Is this clear for everybody? Then, unfortunately for FCA, as you can see here, there are also some impairment losses. Impairment losses means that some projects were capitalized because of volumes and prices, expected volumes, expected prices were enough in order to demonstrate the recoverability of these assets. But unfortunately for FCA, something has happened and part of these assets is no longer recoverable. In particular, as you can see, 949 million in 2019 and 503 million in 2020. In this part of the note, it is not possible to understand what type of development cost has been inserted. But we need to go to the note number 10. And this note is at page 242. This is the note about the intangible assets presented in the balance sheet. Look, the total amount is the total amount, carrying amount is here. 12 billion and 12.5 billion is the total amount in the balance sheet at the end of 2020. In fact, if we go back to the balance sheet, look, this amount. Okay. This. Okay. 12.5 billion. Other intangible assets. And the note 10, 242, there is the explanation. Look, other intangible assets, but capitalized development expenditure are the most important part. The total gross amount is 29.5 billion, of which 24 billion for development assets, development intangible assets. Of course, there is the accumulated depreciation. So, out of 12.5 billion of other intangible assets, 10.5 are for capitalized development expenditure. Only not significant amount for patents, concessions, licenses, and other, and then a residual amount of 180 million. In this part, FCA repeats again what was disclosed in the notes. And this is important in order to understand reasons for the impairment. In 2020, 504 million. In this part, not particularly detailed. We will read the note 2 when we will analyze the impairment test process. In 2019, as you can see, 953 million of impairment losses, mainly due to Europe, A segment, and in particular for Alfa Romeo. So in 2019, FCA decided to eliminate from the balance sheet the capitalized development expenses related to Europe and in particular the A segment and Alfa Romeo. So this means that the projected volumes, the expected volumes, were not confirmed. And so in 2019, 953 million of impairment is not an insignificant amount. It's 1 billion out of 12 billion of intangible assets. So it's important. Money spent with the objective to obtain future economic benefits. Some years ago, the probability, they declared to have the probability to obtain these future benefits. Then, unfortunately, due to changes in the market, in 2019, they were obliged to recognize the impossibility to recover this amount spent in this project. Is this clear for everybody? And the amortization of development expenditure was recognized within research and development costs, whereas the amortization of patents and so on in the cost of revenues and cost of selling. If I go back to this slide, to this chart, okay, look please at 2020. Gross amount 22.9 billion. Read here, addition. What is the meaning of this 2.6 billion of addition in capitalized development expenditure? Probably it's too late also for you, but these are 2.6. It's the amount spent in 2020 in projects that are in the development phase. Okay? So development projects capitalized at an amount of 22.9 billion at the beginning of the period. During 2020, the new project generated new cost capitalized for 2.6 billion.
So it's not the revaluation of the previous project.
It's not a revaluation. There are new money spent. Okay? It is forbidden to reevaluate this project. It's new money spent in 2020, but for projects that are in the development phase. Is this clear for everybody? Then, if I go back to page 235, this is the detail of the income statement, okay, that we have just discussed. I have a question for you. Put together the information of the note 5, okay, look, and the information of the note 10. And tell me how much is the money spent in 2020 for R&D in general. This is the information for the capitalized project.
5 billion.
And this is the information of reserve R&D in the income statement. I would like to eliminate all this part. Okay? Eliminate. The amount spent is the sum of 1.2 billion of cost expense plus, so 1.2 plus 2.6. Do you agree? I repeat here. I copy the figures here. Okay? The cost for R&D expensed in 2020. This amount is disclosed in the income statement. And in the note number 5, we can read 1.2 billion. Okay, 1.2 billion. Then we know that some projects are capitalized, so cost for development project capitalized in the balance sheet. Only the new project, okay? Because the total amount in the balance sheet is the result of projects started many years ago. If we want to understand the cost capitalized during 2020, the amount is shown at page 242, and it is 2.6 billion. Okay, 2.6. So this means that 3.8 is the money spent by FCA in 2020 for new projects. Because the amortization is a cost, but the amortization is simply the cost that is charged in 2020. But most of these projects were started and completed in the past years. So the amortization is not the money spent during 2020, but is simply the accounting process in order to divide the previous capitalized cost over the useful life of the project. This is the amount spent in 2020. Okay? For tomorrow afternoon, please read PSA financial statements and try to find the same type of information. Okay? So this is the information for FCA. Try to find the same type of information also for ESA in order to compare the two groups. Okay?
Okay, if the amortization was for 2021, then that means you have included 3.8 billion.
I didn't catch the last part. So the amortization in this case is for FCA is 1.2 billion. Okay?
Yes.
And this is for projects that are finished and for which the production has been started. Okay? This 1.2 of amortization is mainly for projects that were completed in previous year. Look at the amount of the historical cost, 20 billion. Of course, here, 22 billion, okay? Of course, there is an increase of 2.6, but we don't know if the new projects have been finished during 2020. So the amortization is only for projects ended and for which the production of the engine and so on, the cars, is started. Okay? So we don't know for sure. Most of the previous capitalized costs are for projects that are ended. and for which the car production now is started. We don't know if all these costs, 2.6, the new investment, are for projects that are ended at the end of 2020 or not. Okay? So for tomorrow morning, for tomorrow afternoon, at 2 o'clock until 5:30, please try to understand the impact of R&D and to find the same information for PSF. Okay? Thank you very much and have a nice evening.
PSA or ESA?
PSA.
TSA.
P.
P. Oh.
PSA is a balance sheet on the internet.
Okay. Thank you. Bye.
Bye.